This is a story of superlatives. Biggest, grandest, most valuable, most profitable. This is a story of the world's most valuable company, Saudi Aramco, the crown jewel of Saudi Arabia. Earlier this week, this state-owned oil company was listed in the stock market. There was a big bang. This was the biggest initial public offering or IPO in the world. And that's when the kingdom sold just 1.5% of the shares of Aramco. Saudi Arabia raised billions of dollars with this one move, more than $25 billion to be precise. A sliver of the giant pie that is Aramco. Today the company is valued at $2 trillion, 2 followed by 12 zeros. Up until now, Saudi Aramco was a private company, and yet it was the most profitable company in the world. That's because Saudi Arabia has the second largest proven oil reserves on this planet, and Aramco is the world's largest oil producer. It is responsible for 10% of the world's supply, one company. So if the business was doing so well, why did they have to sell the shares? Because that's what the Crown Prince of Saudi Arabia, Mohammed bin Salman, wanted. He plans to use this money to diversify Saudi Arabia's economy. Can he? That's the question. The listing has faced several problems. The plan was first proposed in 2016. First, the kingdom wanted to list on a big stock exchange abroad. The initial plan was to raise a staggering $100 billion. Riyadh was ready to sell up to 5% of Aramco. But that did not happen. We'll tell you why in just a bit. Navigating the road bumps nonetheless, Aramco went public. The success of the IPO grabbed global headlines, even broke records, and yet it's a disappointment. Why do I say that? Because the sale does not even come close to helping the kingdom out of its economic mess. It's a fact now that global investors have a weak appetite for oil companies. They are no longer the money-minting machines that they used to be. The demand for crude is falling every year. People want to switch to clean fuels. And Saudi Arabia is feeling the pinch. The kingdom is not making as much money as it did in the past. Saudi Arabia's economy is in a fragile state. Oil accounted for nearly 70% of the government's revenues. The profits seem to be shrinking. The kingdom is borrowing more money to keep its economy going. Earlier this month, Riyadh said that its budget deficit will touch nearly 7%. Saudi Arabia has lowered its growth forecast.
Oil revenues now represent 50% of government revenues in the 2020 budget. The government was conservative on revenues in light of the global economic developments and the IMF lowering economic growth forecast for about 90% of the countries.
So the kingdom may have the world's most profitable company, but the listing of Aramco will leave Saudi Arabia no less dependent on oil than it is today.